thank you to everybody who's here today to hear about Pakistan. My goal in the next 15 minutes is to share with you the reforms that we have started since about May. And then I would be happy to take any questions from your end. As Sergi mentioned, I left the IMF about 5 months ago, and similarly, Pakistan also has a new finance minister who has a background also with international institutions who used to work at the World Bank, and we'll be sharing with you some of the areas that we've been working on. I plan to talk to you on three major items. The first is I would like to share with you briefly, in our view, what are the causes of our economic problems, and I wanted to show you some slides which I guess will be up shortly. Second, I want to talk quickly about what are the actions that we took and what are some of the early results from the actions that we took. And I think most importantly, I would like to dwell a little bit upon the outlook, and in particular the question, considering this is the 23rd IMF program that we have signed up with, what in it is it that might make it different from other programs that we have had. So very quickly on the causes of the problems that led us to seek assistance from the IMF, I think they're reasonably well understood. The first was with respect to the current account deficit. And this is a chart from 2014 to 2017, and it shows in the red the current account deficit, which used to be zero, but it steadily grew and reached a historically unprecedented number of $2 billion per month. In this time, the other line is the exchange rate. It looks like it's moving, but actually the scale is zoomed in. So the exchange rate was basically fixed in this time and did not adjust to allow the current account deficit to come back in. The consequence of this, a current account deficit that was growing and a fixed exchange rate, was that our reserves were depleted quite significantly. Now, the current account is the reflection of what's happening in the economy, and what was going on was a consumption-driven boom. This is a simple decomposition of growth, and the point of this chart is to show you that the increase in growth came primarily from an increase in consumption. You will see that the contributions from net exports or from investments, the areas that would provide for a more sustainable foundation for growth, were very small. Now, the other key cause of our current economic problems was the fiscal deficit. Again, this would be a story that's well understood to those of you who have been watching Pakistan. Our public debt has been at one of the highest levels, not the highest level, but it has grown on the back of rising deficits. So these twin deficits is, in a nutshell, why we experienced the problems that we did. And I want to then move on to the actions that we took. And the first and foremost is on the exchange rate. And this chart simply updates the chart that I showed you earlier. And what I want you to focus on is that since about a year and a half ago, Pakistan began to adjust its currency. And that is the blue line. And the point that I would like to dwell on is that since the currency began to move, the current account deficit began to correct. And over this period, it has halved. So the first key message I would like you to take away from my talk today is that we have entered the IMF program at the end of this horizon, which means when a lot of the adjustment in the exchange rate has already happened. This is in contrast with other programs that the IMF has had where the current account is still widening or the adjustment is yet to come. And my point is that we are starting this program when a lot has happened, and therefore we think that going into it, having done a lot, augurs well for how this program might succeed. So that is the first. I'll show you a variant of this chart, which is with the real effective exchange rate. It tells you the same story pretty much. Current account worsened as the real exchange rate appreciated, and vice versa. But I'd also like you to see that the non-oil current account, because oil payments are very inelastic with respect to the exchange rate, the non-oil current account deficit has actually been eliminated over this period. Now, there is a common criticism that sometimes is leveled that we have achieved this correction in the current account deficit by driving growth zero or by severely contracting the economy, and this primarily reflects a compression in imports. And that is not the case as shown in this chart, which decomposes exports into volumes. And I particularly like this chart because it shows that since the real exchange rate began to adjust, our export volumes have actually begun to grow and have grown quite significantly over the period. Export dollar proceeds have not grown as much because export prices, which are determined in international markets, have softened. But what matters to us a lot is export volumes, because that means there is more production, and more production means more jobs. And from a social and a real economy perspective, job creation is one of the key goals. Now, as our exports have grown, typically, historically, we've had a lot of concentration of growth in textiles. But I would also like to point out that this time around, while some of the growth is concentrated in textiles, which is the bar in red, a non-trivial amount of the increase in exports has also come in other sectors, which augurs well for the sustainability of export growth going forward. Now, on the fiscal side, our Achilles heel has been revenues. We have a very low tax to GDP ratio. And this chart simply shows you the revenue growth that has begun to occur since the program started. In my years, having followed Pakistan very closely while I was at the IMF and then now being there, have never seen as much of a drive towards bringing people into the tax net as is going on right now. And it fits in more broadly with the theme of the government to pursue and to fight against corruption. So the war against tax evasion, the efforts to widen the tax base have already begun to give some results. There is an aggressive target. We recognize that, but I want to convey the message that we've started off on a good setting. This simply shows you some of the improvement, and if you look at the primary balance numbers for July and August, we went to the second decimal place, because on the first decimal place it would have looked like zero. But we are actually very proud that there is a small primary surplus for the first 2 months. And again, it's one of the early signs about how we are trying to turn things around. Now, as a consequence of the exchange rate measures, the fact that the exchange rate depreciated so much, and because of the tax measures and also the increases in utility prices, which were necessary to bring the deficit down under control, inflation rose. While this was part and a major part of the reason for the increase in inflation, there were some other factors as well. But the point of this chart is to show you that monetary tightening began in Pakistan as inflation began to rise. And if you see, the distance between the bars and the blue line has actually widened, because we wanted to demonstrate that even though the causes of the increase in inflation are because of the reforms that we're doing, we didn't want to appear as soft on fighting inflation and bringing it down. The point in this chart is also the point in the current account deficit chart, that a lot of the adjustment had already taken place by the time the IMF program starts. And again, the IMF program starts at the end of this chart, meaning that a lot of the adjustment is under our belt already. So let me then move on. In our view, we are trying to put forward a coherent policy package which starts off by addressing the problems: the current account deficit, the fiscal deficit, and the monetary tightening because of the rise in inflation because of these policies. And in our view, I think the message that we're trying to deliver is beginning to take hold, and this chart shows you the turnaround in portfolio investments that has in the last few months. As you will see, non-residents were sellers, and that trend has recently changed, and they have particularly discovered our market for fixed income. Just as a side, I will tell you that Pakistan's debt markets, our treasury bill auctions, each auction is tens of billions of US dollars. The daily turnover, average daily turnover in our secondary markets is around 700 million US dollars. The way you enter our debt markets is exactly the same way as you enter our equity markets, which is through the SCRA account. And that account gives you full repatriation when you want to take your portfolio investment out. We have also now been working to simplify the taxation regime for investment in fixed income securities. And while many jurisdictions already had a tax treaty which allowed them a net taxation rate of around somewhere between 8 and 13%, we've simplified that and are taking a set of reforms through that will just simplify that to 10%, which will be full and final, so that the tax agency will not have any further claims on you. That tax will be deducted at source, and that will be the end of it. it'll be both for the withholding tax and for the corporate tax. So if you have capital gains on your PIBs on the bonds, you will only be paying 10%. Now, let me move forward then, and that's what I want to close on, is with regards to the outlook. And this next chart is fairly sobering in our view, because it shows economic growth over a very long period of time. And you'll see that Pakistan has had periods of acceleration and growth, which have typically been followed by a widening current account deficit. Now, as the current account deficit has widened, our exchange rate policies have typically been such, due to a fascination with the fixed exchange rate, that they have led to fall in reserves. And this next chart shows you reserves in blue, and it shows you the IMF programs that ensued. And in our view, this chart tells you the story that one of the best predictors of whether there will be an IMF program is low and falling levels of reserves. It is by far, the statistic that is a leading indicator. So to us, the question of whether this program is going to be different is really a question of going forward. Is Pakistan going to be able to self-insure and not allow its reserves to be depleted if there is stress in the future? And there will be stress in the future, for sure. There will be a time when the current account deficit trend might change. The question is, how will policy respond, and is there any institutional change going forward? And we think there is. There are several. And the first is the exchange rate movement that occurred. There were a series of step devaluations, but they culminated in us changing the exchange rate system to one which was fixed, to one which is market determined. And by a market determined exchange rate, we mean one where supply and demand factors affect the value of the currency. It still allows us to step in, but we step in only when there are disorderly market conditions, and we don't step in to try to change the trend of the exchange rate or to not let the exchange rate move in the face of a trend. This was a big development. Pakistan has never had such an exchange rate regime, and in the earlier parts of the transition, there was a little bit of volatility. But today, the exchange rate market is much better in terms of liquidity, and the treasurers, the bank treasurers today, are being able to trade without any guidance from the State Bank, as it used to be the case historically. Always, the State Bank of Pakistan used to give some guidance to the market where the rates should be, and used to tell the banks that, okay, you trade at that, and at the end of the day, if you're short, we'll make you square. That doesn't happen anymore, and there was some volatility at the beginning, but now the market is very different. The second thing that we think is the institutional change is that for the first time there is zero borrowing of the government from the State Bank. This historically was another reason why Pakistan would repeatedly come to the IMF. This borrowing has been zero, and there are going to be changes to the State Bank Act in Parliament, and if this is also enshrined in that, that will go a long way to ensure that next time when the pressure comes, Pakistan is able to self-insure and does not lose the reserves. I mentioned to you already the very, very pronounced effort on fiscal reforms. And I want to just end then with these few charts that to us speak to the outlook. The first is the exchange rate. As I mentioned previously, was a series of step devaluations, and since about May, it has moved to a market-based system. This second chart is about the end of deficit monetization, zero borrowing from the government, and this declining trend to us shows why institutionally we might be in a better place. And finally, to us, beyond these cyclical considerations, we feel the biggest goal for us to ensure ourselves from repeated assistance seeking from the international financial community is to raise our savings rate. And this shows Pakistan's saving rate compared to a few peer countries. It is strikingly low. And from a structural perspective, this is an area where we are working on at the State Bank to see what can be done to raise the saving rates that we have. So let me finish there, and I'm happy to take any questions.
Thank you, Governor. We have quite a few questions, actually, so let me try to ask a couple more on the debt side and a couple that come a bit closer to monetary policy itself. So we have one here that says, someone who's been in markets for quite a while and says, Pakistan restructured its debt in the late 90s. How similar or different is the situation now? And what do you have to say about the debt risk we're facing and sustainability?
So I think the best way to answer that question would be that when we were going into an IMF program, there was never any talk of any need for a debt restructuring. And as you well know, one of the conditions before the IMF lens is to make an assessment of whether the balance of adjustment and financing in the program is sufficient to deliver sustainability and returning to capital markets without the need for any restructuring. So that's, I think, answer number one. Answer number two is that our debt sustainability statistics of course, we have a high stock of debt, not as high as some other countries, but still is pretty high. But where we are also particularly affected was the gross financing needs. And by the gross financing needs, I mean the deficit plus the amortization on the debt. A big part of that very high number on gross financing needs was the fact that we had a very large concentration of our debt in very short-term securities. So treasury bills, 90-day treasury bills, were around 50% of our outstanding marketable debt. That has been reprofiled. The debt that Pakistan had with the state bank has been reprofiled into longer-term debt. And what this means is that you will see that the amount of gross financing needs is going to be much shorter going forward. So in short, the fact that there is a fully funded IMF program without any discussion of any debt issues, we hope should be a signal strong enough to address those questions. But I think more than that, I would encourage you to also seek the input from the IMF and the mission chief of Pakistan on these issues.
Thank you. And the second question on that is one we get often on frontier markets these days, which is the role of China. It is an important creditor. Will it continue to be so going forward? How does it fit into the financing picture and also the sustainability one?
So let me take a step back and say that our relationship with China is an important relationship. And it's an important relationship because China has been of tremendous help to us, particularly at times when we needed help and there were not many friends around. But we also want to communicate very clearly that we don't have any favorites, and we are happy and we want more friends as well in the international community. And we want other friends who previously were more active in our friendship and now maybe less active to come back. So it's very important that we are also seen as not having any favorites. That's our approach. Our obligations to China are very transparently reported in the IMF staff report. Over the next 5 years, we have reported our obligations to all bilateral creditors. That's China, that's Saudi, that is others. Many of you would know that before the program started with the IMF, the issue of IMF money being used to pay out China was discussed a fair bit. Newspapers reported on it as well. The fact that we have a program with the IMF, including with support from key shareholders of the IMF, would not have been possible if the issues related to this hadn't been satisfactorily addressed. And the IMF, as you know, has a policy on financing assurances, which means that it doesn't lend unless it feels there is sufficient financing with good prospects from other bilateral and private creditors in sufficient amounts to allow Pakistan to repay the IMF. And the fact that there is a program, we hope conveys a signal that we have identified enough rollover and enough new financing to make that happen.
Thank you. Closer to the monetary policy side of things, there was someone in the audience thinking about what you said on the exchange rate and exports improving. And the question, I would basically summarize it in terms of, at current levels, you think that the real exchange rate is an appropriate one to have external accounts that are sustainable, or you think that competitiveness still remains an issue, or not at all, that we've gone too far on the depreciation side? How do you see it?
A central bank governor should never talk about the exchange rate, and particularly whether it's fairly valued or not. But I will point you to a couple of pieces of statistics that I think will help you answer the question. The first is that there was a very extensive box in the IMF report on the real effective exchange rate and how it compares to the IMF's 3 estimates of sustainability. And I would ask you to look at that box that had data through June 2018, and it pointed some statistics on overvaluation. Then I would ask you to look at the exchange rate correction that has taken place since. And what you will find is that a lot of the adjustment has already taken place. But you should do that calculation for you to see where the situation is. But for me, the most important guide and pointer is that the rate is now market determined. And we are comfortable to let the market take the rate where it wants to take. For us, you know, the fact that market itself has brought the rate down recently is a sign that people are getting more comfortable with the new system. And our export growth numbers show to us that, that the previous tax that existed on exports and the subsidy that existed on imports has been removed and is generating a positive momentum. So this was a long way to not answer your question on whether I think the exchange rate is fairly valued or not.
Thank you, Governor. We have to wrap up this session. There were many more interesting questions, but we have to move on. Thank you very much for being with us. Please join me in a round of applause for Governor Baqir.